Welcome to the Financial Planners Southeast Asia podcast, a show dedicated to driving the positive evolution of financial advice, specifically within Southeast Asia. To join a global community of financial advisors sharing and learning with one another to drive the positive evolution of financial advice, head to xyadvisor.com. Welcome to another episode of the Financial Planners Southeast Asia podcast. Gwen here, and today I am with Felix Neoh. So Felix is the director for Finwealth Management in Malaysia, and I won't introduce him further because I'd like to for you guys to get to know him more in his own words. So Felix, first of all, thank you so much for coming to the show.
Thanks for having me, Gwen.
All right, and I'm really glad that you're here today. But before we dive into our main topic for this podcast, I'd like, myself and for our guests to get to know you more. So how did you get into financial advice?
That's an interesting question. Sometimes I ask myself, how on earth did I find myself in this direction? But anyway, I started work in a bank, right? I was involved with sales of financial products in the bank, and then I moved, changed careers a little bit, but I was always in the financial services, financial advisory line of business. And 20 years later, when I was still in employment, I came to realize that number one, I felt that I did not want to be part of a big corporation where my career path is actually very much determined by the company rather than, what I wanted to do. That's the first thing that I realized. The second thing that I realized, and it's also because of, one of my roles was that I was actually head of, investment products in one of the large, Malaysian and Southeast Asian banks. I came to realize that the way that this business is run it's very much focused on sales. It's very much focused on generating the revenue, right? That the respective departments and all that had committed to senior management, and it's just running the numbers, making sure that whatever activities we do, gives us a type of revenue that we had anticipated, right? But very often that came at the expense of customers themselves, in the sense that, I wouldn't say all the time, but it does happen often enough that, the customers might not actually be sold the right type of products, or, the things, that they end up with may not be in their best interest. And so, when I went through this phase of, evaluating, if I didn't want to be in the corporate world anymore, and if I wanted to do something on my own, what should I be doing? And for me at that point in time it was very clear because of, I have the knowledge, the interest in this area. And, I could see that there was this gap that financial planning, and good financial advice was not actually readily available. That there's just too few practitioners, relative to the population, right? And so that's when, I set out, to basically ensure that I had completed the necessary certifications, right? For me to be able to practice as a licensed financial planner. And then, I started to scout around, I would say, in terms of, which firms, that are offering the type of services that I had in my mind, that I wanted to offer to my clients. And, and basically, it was just a coincidence, at that juncture, once I had already completed my certifications, the company that I was with did give a severance package, right, which I took up. in order for me to have the confidence to come out on my own and start this financial planning journey in that sense.
All right, that's awesome. And
So
now
that's
that
me, and yeah, that's about me in a couple of minutes. How I actually
yes,
ventured into this path. Yeah.
yes, and it's very it's like you were really meant for this trajectory because you've been in the financial advice or the financial institution for 2 decades. So I guess more than 2 decades now. So you must really be passionate about like helping others and with especially with their money. So which leads me to the topic for this podcast is you actually pitched this topic with regards to the value of a financial planner for the working middle class, because there's a big misconception, and I've heard this time and time again discussed in the podcast, not just in my podcast, but in other podcasts as well, that there's a big misconception that financial planning is only for the rich people. So perhaps we can discuss why financial planners are even more important for the working professionals. Now, I'd like to start on with that with, I guess, asking the question, why do people have this misconception in the first place?
I think for me, from my observation, it starts from this point where, or at least in our practice, when a client engages us, right, in a bid to stay independent, right, and knowing at the end of the day that if you look at the business models that exist out there in terms of people in the financial services industry, so we have, and it's very common in Malaysia, and I think in most parts of the world for that matter, is that we actually have it's mainly driven by what we call the commission or commission only kind of a business model, right? So what that means is that you don't get charged a fee, right? But you are sold a product, right? So whenever you go and meet a prospect, you always want to close a sale, right? Simply because you got to pay for for your time, for the parking, for the petrol,
For the
your toll
coffee.
charges, the coffee, right? That you might actually have to pay, for the prospect, right? So you want to be able to close a sale, right? To be able to get remunerated, and so it's very much what we call a commission driven type of a remuneration structure. And our concern, or my concern with that kind of a business structure simply is that, whether or not the product or the service is the best for that client or that prospect, right, you will still be motivated to close the sale, right? Because, that's your only form of remuneration, right? Whereas if you look at it from the other end of the spectrum, there is what we call the fee-only advisors, right? So fee-only advisors, in more developed markets, perhaps in Australia, in the US, in UK, perhaps it's much more advanced. But in Malaysia, it's very rare.
Rare,
right?
yes.
It's simply because if you are a fee-only financial advisor, what it then means is it could only be logical that if the fee is the only form of remuneration for you, then the cost of that fee will be fairly high.
Yes.
And in the Malaysian context, if you were to charge a very high fee, you will likely get a no thank you. I can do that on my own. It's okay. Thanks for the information. And off I
DIY
go.
mentality.
Yes. So what we do, at Finwealth is that we actually practice a slightly hybrid kind of a business model, if you like, right? Where, we just loosely call it a fee for service. So basically our clients do get charged a fee, right? But they receive a very specific service, right? So our financial planning clients, for example, they would receive a full and comprehensive financial plan, right? And because it is not a one-off, kind of a meeting with our clients, we actually, set it up. The structure of it is more of a retainer service, if you like. So what it means is our clients sign up for a 1-year service, right? Which starts off with our, so-called understanding of their financial situation that culminates with the delivery and presentation of a financial plan. But that's not enough, because we are very sure, we know, having observed, how things work, is that, a plan in itself is actually quite useless, right? It doesn't
Yeah.
really fulfill its objective. We really need to match that with the execution, right? Need to do something about it. So for all of that, right, under our fee for service business model, we do charge a fee, right? So the fee, can be anywhere from, 1 or 2,000 ringgit all the way to, 7, 8,000 ringgit, right? So back to your question, why is it that there is a perception in the market that, financial planning is only for the rich? It's simply because, we charge a fee and it's upfront, right? Depending on, in our case, depending on your gross asset value. So you have to pay that upfront, to be able to get all of this. And that is the reason why, because if people will be thinking, if you're willing to pay a fee, must be that you are quite rich, right?
Yes.
Because, those who are not rich are not going to be, willing to go and pay a fee, right? And this is where we need to unpack the reality for people, right? Our prospects, right? What do I mean by that is that, we have to actually share with them the reality of things where, if you're not going to be paying a fee, you are going to be paying a commission, right? And in many instances, the commission, the rate of commissions that are being charged by,
Are higher.
other, even higher,
Mm-hmm.
right? So that is, I suppose, one main reason why there is that perception, right? I can't afford to pay all this type of fees, right? Fees are only meant for the rich, so therefore, I'm not suitable. I'm the wrong profile for financial planning services.
Mm-hmm. Mm-hmm. That's true. That's true. And I can relate to that in a sense that it's like valet parking. So most people, or at least for the middle class and lower middle class, they would never they would never want valet parking because it is an added charge for like for
Exactly.
some. Yeah, right. And so they have this mindset that valet parking is only reserved for the rich and who can afford that additional charge to have their car parked for them. So something like that. Now, before we dive further into this topic, I just want to, I guess, set this thing straight because I realized that this is this is a term that is up for debate. How should we define the working middle class?
Okay, so I mean, the way we define it is very broad, right? What I mean is, if you are still, not financially independent, right? If you are still so-called not at your optimum, earning capacity, right? In your respective fields or your profession, right? If you still have a lot of, I would say, unsatisfied or unfulfilled financial goals, right? I.e., you're still working towards achieving those, then I would say that, you could consider yourself as, a working class, right? A middle, working class in that sense. And to me, there's absolutely nothing wrong with that, right?
Yes. Mm-hmm.
Because at the end of the day, we need something to motivate us forward, right? And
Yes,
if we
that's
think,
true.
I'm only at this and I'm not actually fully achieved my, my complete or, financial,
Financial goals.
capacity. I'm not really there yet. Yeah, I still have those goals and it's still unfunded and all that kind of thing. So yeah, then you should be working towards that.
Yes. So yeah, I just wanted to get that out of the way because there was a debate or there's a misconception. So a lot of people think that they're in the middle class, but some of them are actually either above the middle class or below the middle class. So yes, I just wanted to get that out of the way so that we can
Yeah.
properly define it. But now, I guess leading up to that, or is the challenge of persuading the middle class or middle income consumers to actually go ahead and seek financial planning for themselves. So, how can financial planners actually address these concerns in the first place? Because a lot of people who look at financial planners and they don't like discuss this with their friends and their family because they think in their minds that they don't need it in the first place. So how do you think can financial planners address these misconceptions, at least within their community or their audience?
You've actually hit the nail on the head, in the sense that very often when we do have an opportunity to sit down with a prospect and talk about financial planning, talk about why financial planning is important and why you actually need to focus on these areas. Very often what we find is that people, they do come in with a perception of how they fare in terms of personal finance. So one of the things that we do ask, people that we meet for the first time, before we present, an introduction to our service, we normally would just ask, if you were to give yourself a rating, from 1 to 10 in terms of how well you're doing financially, where would you rate yourself, right? So they will give themselves a rating, 6, 7, 8, whatever that number is, right? And then we go through our presentation, right? In terms of, what are the issues, that the middle class, would face? What are the important aspects of financial planning, and are you doing it and all that? And when we end the presentation and we ask the same question again, suddenly they find themselves, oh, you know what? I think I might have rated myself too high. Right? Because based on what you've actually told me, I've actually not done this, I've not done that, I've not done, this one, or, I did this, but it was a long time ago. Hey, you know what? The insurance policy is something that I bought 20 years ago. Perhaps it's no longer relevant for me, right? So, the way to address is that, I think, we need to create the kind of awareness that, financial planning is for everybody. It's not for a certain, type or class of people out there only. What is different is the specific financial planning needs of individuals are different, right? It can be dependent on where they are in terms of the life cycle. It can be different in terms of where they are from a financial perspective, right? How much assets could make a difference. Their lifestyle, I don't mind sharing in the Malaysian context, with Sharia laws, for those who are, Muslims, or those who marry a Muslim, they are still going to be governed under Sharia laws. Then, the decisions that you make, from a financial planning perspective will be different.
Yes.
As a result of that, right? So you have to cater for that, right? A person who is, still in an accumulation phase of their life, of their working life, in your 40s, you're in your 50s, kids are still,
in college,
so going through the education in college and uni and what have you. That kind of phase, your needs are different from someone who is already, empty nester, right? You've already got the kids, done the education bits, now is retirement. It's going to be a different need again. So from that example, you can actually see that the needs, it's ever present. The financial planning needs of everyone is ever present. The only difference is that it changes over time, right? Depending on one's situation and all that. And therefore, financial planning is an ongoing process.
That's true. So I guess because it is an ongoing process, and this broadens up the things that financial planners can actually offer to the middle class, right? But I guess because at different life stages, there are people tend to earn different types of income. So what do you think would be like the best way that a financial planner can provide to the middle class in terms of each stages in their financial lives?
Okay. So if we try to so-called simplify it, right? So if you're in your early part of your careers, right? So, you are in perhaps the first 3 or 5 years of your working life, right? your needs are going to be a little bit different. What I mean is that, so you're going to be quite young, and you're going to be expecting, one of the problems when we deal with very young adults is that they think they're going to be living forever, right? They can live forever,
Yes.
Nothing's going to happen to them. What kind of risk? What do you mean by risk, right? What do you mean by retirement, right? I'm it's far away from me. But the reality is that we need to make sure that they have, at least the bare minimum protection needs, right? So, you'll be talking about protection. You'll be talking about, making sure that you play a bit of defense in the sense that, you make sure that your cash reserves are there, right? Just in case, anything happens, there's a redundancy of any sort, or there is, an additional bill that comes your way that's unexpected, you have the funds rather than to go into debt to pay that off, right? So protection, you talk about, the cash reserves, right? And you need to, then you also talk about, starting that investment plan, right? You might not have the 100,000 to put down on any kind of investment, but you probably have, because of your earning capacity, you probably have the 100, the 200, the 300 ringgit that you can actually put down, right, in an investment plan and start accumulating from there. So it's I would say the focus is very much on the protection bit, playing the defensive, right? And also starting on the right path, right? Right path in terms of having the right kind of financial habits, right? Because you don't want to develop bad financial habits at the very early stage of your working careers, right?
That's so true, yes.
Yeah, so the focus, for an early career person would be that, right? Whereas if you are so-called in your middle career, then perhaps you're talking about those who may have already now gotten married, maybe you have one child already, right? So you can already imagine that, as income, is growing, but then your commitments are now increasing, right? So with the commitments increasing, then the question is, if anything happens, right, what will happen to the dependents, right? So then perhaps, and this is where, for example, term insurance is more important. Just in case anything happens to you, the mortgage gets settled, for example. Anything happens to you, the kids' education is still not going to be affected, right? The tertiary education will not be affected. So protection needs is important. But again, because incomes are rising, then your ability to fund investment opportunities will be higher, right? But again, you need to do it diligently. So if you can call it forced saving or automatic savings, that's actually going to go a much longer way. But the beauty of being in this stage, you will likely have more so-called funds for investments. You can get if you work in a good job or career, for example, a bonus might come your way, and you have the lump sum for investment. So you have more opportunities in that stage, right? Whereas the later career person, would now be saying, what, my kids have actually drained me from, all my savings. Now I need to really, really, focus on
Save for
the
yourself.
retirement savings. Yeah, the retirement savings, and I really need to. And it's in a sense, for many, that's the peak of their careers as well. So the ability for them to do that is there, right? But there is a risk that they need to be mindful of, and that is that you don't want to make any mistakes, or you want to minimize the chance of a financial mistake, because then it's going to set you back.
And you
are towards the end, correct, of your working careers. You really don't have the luxury of time to make up, for whatever lost time. And if I would just end with, once you are in the retirement phase, then, again, you can already imagine the needs would be different. The protection needs for death or permanent disablement that you had actually gone for when you were much younger, you probably don't need that anymore. Perhaps you haven't got a good medical plan at that juncture, then you want to make sure that you have a good plan in place. So the needs, as you can see, will be very different depending on the life stage that one is in.
Yes, and I really wanted to tackle that because of different stages in our lives, we also have different financial capacities and different types of commitments throughout like the our life years. And I guess I wanted to touch on that because well, throughout the life stage, and because we have different like financial capacities for each of the stages, how can a financial planner price their services with that would cater to each of these life stages, because it's going to be different, and we want to make sure, right, that that we can provide the an excellent plan plus execution program for the client, but we also want to make sure that we're not doing this in the expense of our business. So, like, and I guess this is a very I guess it's hard for me to place this question because it is quite a big topic to do. But yes, I just wanted to start with that. Like, what would be an ideal business model for financial planners to be able to sustain their business, but at the same time cater to each life stage of a working middle class?
Okay, so you're right that we deal with clients from various stages of their careers, as well as different financial standing, right, in terms of their net worth or their gross assets and what have you. And it is for that reason, right, that in our minds we are very clear, right, that financial planning is actually for everyone, right? You need financial planning, irrespective of who you are, right? The only thing that is different is, what are the aspects of financial planning that is more important to one versus another, would depend on, the individual, situation. But financial planning is for all, right? So that's the first thing. Then when we look at the clients themselves, right? Give you an example. Let's say if a person is, early careers, right? To ask them to pay a few thousand in terms of fees, that will be something that they probably might not be able to, number one, cough up the funds, or they will find that, it's probably not justified because they might not be able to maximize the opportunity, of the whole financial planning process. They're going to be very much just paying fees to gain knowledge, but then when it comes to the execution, or because funding is not there for this, funding is not there for that, or you don't have this need that yet, you don't have that need yet. So in terms of execution, it could be minimal. So then that being the case, then while we still have financial planning as the overriding service that we offer, but for a person in that kind of a situation, right, then the focus will be more on the product delivery, right? So what it means is, with just simplified financial planning tools, right, then we connect the clients to the products that will already meet that. Okay, so I'll give you a very simple example. So for many people in that kind of a stage, right, they want to start investing, right?
Yes.
Now, when you want to start investing, the problem that many will face is that, when I want to invest, I want a higher return. That must be the game plan, right? Higher returns always better, right? But for us, because we have financial planning in mind, right? All our advisors are trained in that way, that we have financial planning as the end goal for everyone. However, financial planning in the context of a very young, working career person, might be more of accessing the right kind of investment product, to suit their needs. But eventually, they can graduate towards the whole financial planning process. But it is going to be in a seamless way. It is a seamless progression, right? So what it means is that when we do investing for, someone of that kind of a profile, we share with them in terms of financial goals, right? What are you saving this money for? Do you have a goal in mind? Is it because you intend to use it as a down payment, for example, for the purchase of your home, a new home that you want to buy? Is it for that purpose, or is it for another purpose? Someone else could actually have, very simple type of goals at that stage, or maybe I want to go for a trip somewhere. I want to go to Australia, for example, for a holiday. It's going to cost me 10,000 ringgit. Right? I want to save towards that, right? So we put it into, the context of, when you're investing at that stage, right, of your life, think about it in terms of the goal. So when we think about it in terms of the goal, then there is a lot of clarity there. Why? Because we will be asking things like, for example, what is the amount that you need to save towards that, right? So what is that amount for that goal? How many years would you be planning to save towards that goal, right? And then it becomes quite apparent to us, right? Okay, what kind of returns can you sensibly achieve versus, do you really need to achieve to be able to hit that goal? And if that return that is required, the ROI that is required, is just simply not possible, right? Or it's going to be very scammy type of returns. 24%, 30% return per annum is required. Then we tell the customer, well, you have to be realistic about it. Either you're going to save more, or reduce the goal target, or delay that purchase, right?
Yeah.
A little bit later. So what I'm saying is that when we deal with people from different so-called backgrounds, then it's either we start with so-called that product, and we still call it product advisory, right? So it is advice in that sense, because I'm not just selling you a product for the sake of selling you a product. I'm selling it to you in the context of a financial plan, right? So that eventually, when you graduate to the full financial planning service, it is still very similar. We're still talking about the same things. It's still the same lingo. I'm not going to change my advice just because you have now paid for an advisory fee, right? It's still very consistent in that sense, right? So and then if you are so-called already, the so-called middle class, right? Then obviously, you have the option of either going for what we call a modular kind of a service. That means you just focus on one particular area first, or you go for the full service, which is a holistic, financial planning service, where we look at all the key areas of personal finance, right? So that will be, yeah.
Yeah, and so thank you so much. That's very. It was. I think that if there are regular people who are listening to this, to your explanation, it makes more sense. So it really clarifies a lot, because it makes sense for regular people to start that way, to have no money, and therefore they just need the bare basics. And because I feel like there's a really big difference in looking into two types of people: those who have reached out to a financial planner, and those who do not. So let's say there's a 20 something who wanted to start investing, and then this person wants to do a DIY. And so that person started investing first without getting protection, while the other person who reached out to a financial planner, upon hearing the financial planner's advice to them, took protection first before taking on investments. And that makes a whole lot of difference in terms of how they see their finance and how they are going towards their goals for the future. So it sets up a really solid foundation for their financial management, if they are able to I guess get a hold of a financial planner. Now,
Yes.
so because I always see a financial planner, and I've learned this through experience, that a financial planner takes care of your blind spots. So if you're reaching towards a goal, there are some or a lot of small things, and they may be small, but they can actually have a lot of impact to your future. And these things can be addressed by a financial planner. But that's the problem with our generation now and the previous generation, was that they were not able to determine these blind spots, because there were no financial planners, or the financial planners were not very, or it wasn't really known, right, that there were financial planners. Or if it was known that there were financial planners, people didn't believe in the industry yet. So now people have been aware and continue to be aware of the value of a financial planner for their lives, and now hopefully more working class people can also have that idea that the financial planner is working for them instead of against them, so they're not really the salesman type anymore. So I guess my next question would be for you, Felix, is you mentioned that when it comes to a point in time that your client can either go for a holistic financial service or a modular service, like, can you tell us more of the difference between the two, and like how can and what are the differences in terms of execution as well with the two types of services?
Okay, so basically, in Malaysia, at least, people like to, find product solutions, right? So product solutioning tends to be, easy in the sense that, if you have a need, you know, uh, get the right product provider and you can get the product. So that's more on the product side. What we try and do is we add a little bit more to that whole mix by saying, you know what, yes, we have a lot of products, right? We are in a position to give you independent advice by virtue of us having the right kind of licenses to be able to sign up with multiple product providers, so we can actually do the evaluation for the clients and then present to them, here's what we think are the best three, for example, ideas, and you can choose from any, and we are indifferent to whichever you choose simply because we represent them all, right? And we've really done that first level evaluation for you. So that is the product side. Then, sometimes the customer might say, but I actually need a little bit more in-depth information to that, right? It might, for example, involve, studying, for example, the client's financial situation first before making that kind of a recommendation. I just give you a simple one. Let's say, for example, it's estate planning, right?
Yeah.
So when you're trying to write a will, or very often you go and see in Malaysia we have what we call will writers. Apart from the lawyers and other, we also have will writers. Now the thing is that if you go to the will writer, and if the sometimes it is very much the client tells you what he wants, and then you just follow through.
Yeah.
But the reality is that whatever the client tells you, again, you mentioned just now about blind spots. So he doesn't really know, he might not know his blind spots.
Yes.
Right? He doesn't know what he doesn't know. So, so by virtue of, no one having a little bit more in-depth understanding of his situation, right, then he will not, the advisor is not able to give, the relevant advice in that sense because no visibility. So in that sense, the customer might actually, take up, the estate planning modular service, where then we go through a little bit more in depth, but it's again a little bit more, but not comprehensive, right? Not just beyond the estate planning aspects of things, right? So I'll be honest with you, Glenn. The truth of the matter is that modular service is actually not, very. I would say not very popular.
Okay.
Not very popular. Simply because, as I mentioned, we start off by actually placing the priority on financial planning, as a service, simply because we believe that is really what everybody needs, right? So the customer will say, you know what, I actually, want to do this estate planning, service. And then, your full financial planning service is a little too high for me, right? I can only afford a little bit lower than that. So then if that's the case, then we might, end up offering this modular type of service. Although we know that in actual fact, the customer would still benefit the most through the holistic financial planning service. All right. So it's there. It's not really something that we so-called advocate strongly. It's just there in the event that you want more than a product, but you're not ready for the holistic yet, right? So it's so-called a bit of a middle ground. But the idea here is that, once the customer has experienced, the service, and once the trust is built, right? So because we are talking about personal finance, it's very, well, personal, right?
Yes.
So not everybody, and especially in the context of Malaysians, I actually find myself so-called teasing prospects. I go through the fact finding, or what I call the client understanding questionnaire with new prospects, and then when I'm done with it, I just pause and I just ask them, have you ever reviewed or shared so much in terms of your finance with anyone
With
before?
anyone else. Yeah.
Yeah, and basically you can really imagine 9 out of 10 of them, you would say that, oh no, I've never, then you can suddenly see their eyes, they're like a little bit concerned. Oops, what have I done? So that's where obviously for our part, we need to assure, those prospects that, we are licensed, number one, right? Even though you're not our clients yet, right? We still have the duty of care to ensure that whatever information that you've revealed will be kept PNC. Right, so we assure them, but the point is that trust is something that will be. It takes time to build, right? So some people, they start off with something simple, like I said, like the product advisory service or the modular service, and when they actually see, our approach to that whole advisory process, right, and we so-called get more and more comfortable with it, and that's when they might find themselves, being able to see the value of
Yeah.
going for the full financial planning service. Yeah.
Yeah, I definitely agree, because I'd like to think that the modular services are actually like a foot in the door
Correct.
for you to like showcase your services, and show them how valuable your advice is, or financial planning is. And once they have, as you said, gained that trust, because I think that people are willing to pay more if they trust a certain person, or they trust a certain brand, right? Like,
Yes.
let's say luxury brands like Chanel or Gucci, they, even if they know that it's very expensive, like they're paying for the brand, but because they know that that brand actually delivers, has good quality, good customer service, all that good stuff, they're willing to pay more. So yes,
Yeah,
I think
exactly.
that's a really great way to start off with, for a person's financial planning journey. Because if the middle class hopes to build a financially viable future, it's important to take care of those blind spots. And what better way for that to be taken care of than through a financial planner? So thank you so much, Felix, for discussing this very crucial topic with me in this podcast today. But before we end the show, I'd like to ask if there are any people out there who want to get to know you more, or want to know more about the services that you're offering in Finwealth. How can they reach you, or where can they get to know you more?
I think the easiest is basically to check out our website. It's Finwealth, finwealth.com.my. Our information in terms of our services, as well as our contact details and all that are there, right? Or you can actually look for us on Facebook as well.
Ah, wonderful. So I actually have those on my notes. So I'll put the everything in the show notes for this podcast below. And again, thank you so much, Felix, for coming into the show. And I really appreciate all of the knowledge that you've shared with us today. And I hope this helps not only financial planners to offer more services and provide more value for the working middle class, but for the people who are listening to this podcast as well. So have a good one.
Thank you, Gwen.